Hello and welcome to SME TV. I'm your host, Angela Vithoulkas. Today we get up close and personal with our top 5 tips for the end of financial year. The month of June represents the halfway point in the calendar year, the official beginning of winter, and usually it's when Wimbledon is played. Not so at the moment. It also signals the end of financial year and it's usually a frantic time for SMEs. Are you ready? Please remember to subscribe to our YouTube channel to support us and all SMEs. And we encourage you to comment. In fact, jump on right now, down below, and tell us what you think. And share SME TV. Joining me today is financial coach and founder of Sort My Money, David Rankin. Welcome, David.
Hi, Angela.
How are you?
Yeah, really good, thank you. It's a busy time for SMEs, isn't it?
Absolutely is. Look, and it's nothing new here, David. Every year we face the end of financial year, so the pressures are the same. Although, like most SMEs, I too sort of wake up mid-January, mid-June and go, uh-oh, it feels like it's just around the corner, as if I didn't know it was coming. Now, before we get to the serious stuff, and you're going to share with us your top 5 tips for getting through the end of financial year, or how we should get ready at least, and what we should keep top of mind, you've got a fun fact you want to share with us about the end of financial year.
I've got a fun tax fact. You didn't think that existed, did you?
No, I was going to pre-comment and say, there's a fun fact, come on.
Because I don't come from Australia, as you can hear originally, I kind of notice different things. And I've always thought it's fantastic that Australian tax year starts in the middle of the calendar year because it spreads the crazy out. Whereas in other countries, you go end of financial year is end of calendar year is kind of end of everything. It's so mad. So I just thought it was brilliant foresight on the planning of whoever did that. And I've looked back, actually, it's called Google, but I've looked back in history and found that the colonists, the Victorian colonists, adopted a 1st of July new financial year, if you liked, and the other colonies in Australia followed suit. And then Federation in 1901 said, this is such a great idea, we're going to adopt it. So it goes back to Victoria, the colonies, 1870, and I say well done because I think it's a good system.
It wasn't until I read your fun fact and considered it that I actually had this flash of horror in my mind of having to wrap up a financial year in December, along with Christmas and Boxing Day and everything else that comes with it. And I think I would have just checked out of business a long time ago. If it is,
so I think that would send you stir crazy, wouldn't it? Yes. So let's be grateful for small mercies.
Yes, we should do that. Now, what we've got to look at here today, and as you pointed out, where we've got to get down to the serious work of the end of financial year. You've got some top 5 tips to share with us and SMEs, mindful of it's actually quite customised and unique to this particular end of financial year 2020 because we've got COVID in play and there's a few other differences. So we're going to start with the first one. This is one of my cute favourites, home office expenses. Now, suddenly the dining room table has become a legitimate office, a legitimate home office.
It's become HQ, isn't it?
Yes. It qualifies as your place of business. Tell us a bit more about that.
And again, talking of the unexpected, a fun fact about tax, the ATO, who'd have thought it? But they're actually doing a great job with this because not only are they doing JobKeeper, but they're actually helping millions of people who haven't worked from home before. And they've set quite a generous rate of 80 cents an hour for the claims, for any claims that people make. And those claims can be the costs of owning, maintaining and using your home to run a business. And these would be expenses like lighting and heating. And all you have to do is record the number of hours you work. That's pretty easy, isn't it, to cash in on the 80 cents an hour. And basically they've upped the amount, which is fabulous. And they've removed the requirement to have a dedicated business, home business for these claims. So that means, as you said, Angela, working at the dining room table now qualifies for those claims. And it gets better because multiple people working in the same house, such as a couple living together, if they're both working from home, they can claim the new rate. And I'm sure there's a lot of people watching this and they'll be, couples like my wife and myself, and they're both business owners. So it's very user friendly. Now,
I'm just going to jump in there, David, because I'm pointing out that before, in order to claim a home office, you had to have quite a defined definition there of your space and be able to prove that there was a physical look to your home office, and that's why you could make those claims.
even had to be able to prove there was a dedicated doorway for that home office as well.
That's right. So they've relaxed all of those because, you can't just knock down a wall and put in a door and do sorts of other things. And that's why cheekily we've pointed out, as you said, the dining room table now qualifies as your office. And keep going, because
if you do want to use the old system, and basically it will be down to you and your accountant to decide. It's still available. You've got to keep accurate records. You've got to keep a timesheet. And you'll be talking about, claiming pro rata, utility deductions, electricity, gas, phone, internet, water, insurances, rent, council rates, mortgage interest. And basically that's based on what proportion of home running costs can be attributed to your work or your business. There is a kind of bit of a caveat with that one, because homeowners, if you're a homeowner rather than renting, it's possible that you lose what we call the partial main residence exemption, which means that when you come to sell the property, you might have to pay capital gains tax when the property's sold.
And the complication that I read from your notes is that it could be subject to capital gains tax if you take it too far from having, the home office base or your place of business at home. Something to consider for moving forward, because a lot of people will be facing that dilemma or that choice where they do end up working a lot more from home than they ever used to, just because we're sort of finding our new way in this new workforce land that the bosses might employ or that the SMEs might have. So that's a good point to make, depending on how far you go on claiming.
The old system, but that old system, if you choose to avail yourself of it, the amount of tax payable under that system is based on the period used to produce the income, and also the proportion of floor area that was set aside for the business. Now, ultimately, it'll be between you and your accountant, but I personally think that 80 cents an hour by the ATO, thumbs up to the ATO for that one.
All right, well, if we were rating any of these with a thumbs up for the ATO, which it looks like we might be, if we move to number 2, the $150,000 instant asset write-off scheme. Now you say, and I quote, "What's not to love about this?"
Yeah, this is a thumbs up to the government, and this is beyond political. It's just a good move, isn't it? So if we go...
Let's make sure we give everyone context, David, on the journey, the dollar journey of the instant asset write-off, because it's 150 now.
Yeah, carry on, Angela.
It wasn't. It's 150 now, which is great, but it wasn't. So tell us about the journey of where it started.
So it's history today, isn't it? So basically this was, and I think if we look at the history, we appreciate the present even more. So this was launched in financial year 2015-16. And this is the instant asset write-off scheme. Back then, the original one was a $1,000 cap. So you could buy an asset and depreciate fully that asset in the same financial year up to the value of 1,000. Then it rose. The government basically have been extending this financial year by financial year, and the amount has gone up. So the amount went up to 30,000 that you can write off, and then the amount shot up, and this was a COVID measure, to 150,000. And then the second COVID measure here is the government has now extended this by 6 months, so to the end of this financial year, the end of December this year. So we're looking at 150,000 instant asset write-off, valid to the end of December. But the reason we're talking about that now is if you want to gain from that in this financial year, your purchase has to be made and ready to use by the 30th of June. So we've got 2 deadlines here, the 30th of June and the 31st of December.
Are you saying, David,
there are essentially 2 $150,000 asset write-offs that you can take advantage of, one in this financial year and one in the next one?
That's absolutely my understanding, correct? Because that's mine
too. Yeah.
Yeah, this financial year comes to a close in a matter of a couple of weeks, matter of days, if you like, and that's the door closes on that one, and then we start again with another 150 for next financial year, but it's up to the middle of the financial year, 31st of December. The great thing about this is that no application is required. The write-off simply gets applied when you lodge your tax return. So once you see the background and the context, you realise 150K is a very generous amount of money.
Yes.
Now, the caveat again here is that it's not a situation, or be mindful of your cash flow. So don't necessarily run out and start to buy things just because you think you're going to get this instant asset write-off. If it dries up all your cash flow and you don't have any money or you're going to debt for it, it kind of negates the purpose.
Absolutely. This is the point. It's not for everybody. The cash needs to be there, and it's designed to promote cash flow, not destroy cash flow. So you need to be, consume responsibly, I think that the saying is. And it's not like there's 150k going into your account. So let's just get this right. This reduces the amount of tax that your business has to pay according to the rate of tax. So if we talk about a small business typically taxed at 27.5%, you would get a dollar advantage of 27.5% up to 150. So the maximum, I calculated before this show, back of an envelope, the maximum dollar advantage is 41,250. It's pretty significant nonetheless.
Most people have the misunderstanding when they hear of some kind of write-off that it's the entire amount, but it's not. And that's important to point out. Top tip number 3, superannuation. Timing is everything, David.
Yeah, it certainly is. And it's this looming deadline of the 30th of June, isn't it? And basically, if as a small business owner, you want to claim a tax deduction for super payments for your employees, the super has to be paid by the 30th of June to be tax deductible for that financial year. And then, of course...
You've double aspect here. It's what you need to make sure that you've done for your business to get the deductions, as in pay your employees super, but also yourself.
Yeah, exactly. And this is why it's in my top 5. It's actually number 3 here, because I know notoriously business owners are bad at sorting their own super out. And I'm glad you've pointed that out, because this is all about looking after yourself as well, making your own super contributions by the 30th of June, checking your super caps before you do that for yourself as well. And we know that small business owners have significantly less super than employees. And we also know that small business owners earn disproportionately lower income than employees. So there is another aspect of this as well. If you are a low income earner, you can get a government co-contribution of up to $500, which also helps to boost your retirement savings.
That's right. And
it might not sound like a lot, but it actually is. That little bit of a top up does make a huge difference. And if we keep on the line of what makes a huge difference, we also need to be mindful that there's a one-off unique situation with being able to draw down on your 10K, on your super by 10K in this financial year. Because of COVID, government has given us that ability. And in the next financial year, so in the space of 1 month, you could draw down $20,000, 10 and 10.
Exactly. So we're looking at both ways. We're looking at super in and out. If you're in the fortunate position you can make extra contributions for yourself, that's fantastic. And you might even get a little bit extra from the government. If not, totally understandable. You might need to withdraw super. So one of those hard deadlines is the 30th of June. And then you move into a new situation with a new financial year and potentially up to another 10,000. But really managing your super, whether it's withdrawals or extra deposits, I think it's going to be very important this year to be really on top of that.
Right.
And we just want to point out to everyone, this is the one of the pleasures of when we do a recording in Zoom these days, is that occasionally we do hear other interruptions. Any banging that you do hear during this interview is, of course, David's wife building him a new house out the back. Don't worry about that. He's taking advantage of all the tax write-offs that he can fit into this financial year. Tip number 4, David, the small business income tax offset for sole traders. Now, it's a long sentence and many of us won't be aware of it. You might actually be able to reduce your tax bill.
Exactly right. So again, this is a nice win. Again, thumbs up ATO. Who'd have thought it? The small business income tax offset for sole traders. So if your business is not a company and if your business revenue, it's about revenue, not profit, is under 5 million, you can claim the small business income tax offset, which can reduce your tax bill by up to $1,000, which, let's be honest, for small businesses and startups, $1,000 in your pocket is better off than $1,000 in the ATM's pocket. Currently, that offset equates to 8% of tax payable on your business income. So again, the benefit applies to sole traders, Also those who share in net small business income from a partnership or trust. And I think it's very important little boost to business owners and small business owners, especially in those early stages of growth. And it really is the government and the ATO's way of recognizing the potential productivity and also the entrepreneurialism of those who do decide to go it alone, especially in the early days. But basically, it's available for anyone, as I said, within those parameters, as long as you know the company.
And what we may not understand here is that that $1,000 may sound like a small amount, but it's multiples if it's applied to lots of sole traders, and that's coming out of the tax of the economy. So we need to be mindful about how many times it's multiplied in order to get to that end total and how much the government is giving back. But also it's a great saving. I mean, $1,000 can come at a time when you've got lots of other expenses happening. It can make all the difference.
And end of financial year tends to be a little bit tight for money. You might be getting rid of some money and spending on assets, so it's very welcome at this time of year.
That's right, it's very welcome.
And my favourite one that we often forget of a top tip, number 5, lodge your tax return.
Yeah, lodge your tax returns and use, heck, you can do it on your own if you want, but use a registered tax agent, I say, because a registered tax agent, such as an accountant, buys you time, and therefore we all know time is cash, so it buys you cash flow as well. So you need to register your upcoming tax return by the end of October if you're doing that on your own. But if you use an accountant, registered tax agent, you can lodge those by as late. You can lodge and you can pay later, and it's by as late as mid-May 2021.
Just in time for the new financial year. If you everything to that,
you push it that far, but it takes the stress off a little bit. Even, what I tend to do is I lodge all of that on time, but you know what, then it just gives you a breather as far as paying. I think get everything done as you would do, but you get a bit of breather with the payment, and who doesn't need that?
It's always nice to buy as much time as you can, because it seems it's the one thing that we run out of consistently. David, thank you very much for being with us today. David Rankin, Sort My Money, our SME TV financial coach. And of course, please remember to subscribe to our YouTube channel so you can share, like and comment and get other SMEs on board. A big shout out to the SME Association for their support of SME TV channel. And if you have any additional information to give us for our business community, any tips or tricks of the trade, you're welcome to send them through to news@smea.org.au. That's it from us. Thank you very much, David.